FuboTV, trading under the ticker symbol FUBO, is currently navigating the intraday session at a price of $3.95, marking an increase of just over 1.14% for the day. Volume is moderate as the market establishes its early direction. But while the average retail investor using platforms like the Robinhood app or SoFi Invest might be watching that small green percentage and either breathing a sigh of relief or feeling a pang of frustration, they are fundamentally missing the seismic tug-of-war happening just beneath the surface. The real story isn't about this minor daily fluctuation. It's about the sophisticated options activity that suggests a major move is being priced in by institutional players who operate on platforms like interactive brokers, a move that the daily chart barely hints at. The expectation from the public is that FuboTV is a David in a field of Goliaths, a niche streaming service destined to be crushed by the sheer weight of competitors like YouTube TV and Hulu. The narrative is one of cash burn, subscriber acquisition costs, and a constant, desperate fight for market share against companies with infinitely deeper pockets. It's a compelling, simple story of an underdog struggling for survival in a brutal industry. However, the reality of the FuboTV thesis is far more complex and tantalizingly disruptive than this simplistic narrative allows. To view FuboTV as just another streaming service is to fundamentally misunderstand its core strategic mission. The company is not merely trying to sell television subscriptions. It is building a comprehensive ecosystem designed to merge the passive experience of watching live sports with the active, high-margin engagement of sports wagering. The streaming platform is the delivery mechanism, the vast and expensive Trojan horse designed to capture a highly targeted, sports-obsessed audience. The true prize, the end game that sophisticated investors are betting on, is the potential to monetize that audience through integrated, real-time betting. This transforms the entire valuation model from one based on subscriber numbers and RP to one centered on user engagement, wagering handle, and the creation of a powerful, self-reinforcing flywheel where media content drives betting and betting drives deeper engagement with the content. This is a high-stakes pivot that moves FuboTV from the cutthroat streaming wars into the explosive growth of the legalized sports betting market. The company's trajectory is therefore not a straight line, but a volatile, binary outcome dependent on execution in this secondary, far more lucrative arena. Looking closer at the recent market action, the stock has been trapped in a well-defined channel, finding support near the $3.50 mark and facing resistance as it approaches the $4.50 level. The trading volume we're witnessing today, while not explosive, is consistent with the accumulation phases we've seen prior to previous upward moves. There's a quiet but deliberate absorption of shares by larger entities, a stark contrast to the often frenetic and emotionally driven trading seen in more prominent names like Tesla stock or Nvidia stock. This type of methodical buying suggests a belief in a longer-term catalyst, not just a short-term trade. Institutional ownership, while not dominant, shows interesting pockets of conviction. Recent filings reveal that while some larger, more conservative funds have trimmed their positions, a number of smaller, more aggressive hedge funds specializing in disruptive technology and gaming have been quietly initiating or adding to their stakes. This is the kind of divergence, and it merits attention. It signals a shift from generalist investors who may be managing risk across a broad portfolio using tools like Schwab Intelligent Portfolio to specialist investors who see a specific asymmetric risk-reward opportunity. They are not investing online in a broad ETF. They are making a concentrated bet on a very specific corporate strategy, likely using the advanced order types available through platforms like Fidelity's Active Trader Pro or Interactive Brokers to mask their entry points. To understand the challenge and the opportunity, one must first grasp FuboTV's business model. At its core, it is a virtual multi-channel video programming distributor, or vMVPD. It aims to replicate the traditional cable bundle over the internet, with a heavy, unyielding focus on live sports. This is its key differentiator in a crowded field. While other services offer sports as part of a broader package, FuboTV's entire brand identity, its channel lineup, and its user interface are built for the sports fanatic. It offers an extensive array of regional sports networks, international soccer leagues, and niche sports channels that its larger competitors often overlook. This strategy, however, comes at an immense cost. Content rights, particularly for live sports, are astronomically expensive and are the primary driver of the company's significant cash burn. Every earnings report is a tightrope walk, balancing impressive subscriber growth and rising advertising revenue against these crippling content-related expenses. The market's expectation is that these costs will eventually suffocate the company, preventing it from ever reaching sustained profitability. This is where the contrarian reality begins to assert itself. The recent quarterly reports have shown a nascent but crucial trend, a path towards positive adjusted EBITDA. Management has been relentlessly focused on optimizing its cost structure, improving ad monetization through technology, and strategically pricing its subscription tiers. They have demonstrated an ability to grow average revenue per user even in a difficult consumer environment. But the linchpin of the bull case remains the sports betting integration. After acquiring Victory and Balto Sports to build out its wagering infrastructure, FuboTV has embarked on the slow, state-by-state process of launching its Fubo Sportsbook. The vision is seamless integration. Imagine watching a football game and, with a single click on your remote, placing a wager on the next play, all within the FuboTV app. This creates a powerful closed-loop system that increases user stickiness, extends watch times, and opens up a revenue stream with significantly higher margins than streaming subscriptions. If a user of a Fidelity brokerage account sees Fubo as a media company, they might pass. But an investor who sees it as a future-facing gaming and entertainment hybrid may see immense value. This is the core of the expectation versus reality conflict. The future outlook for FuboTV is a landscape of high mountains and deep valleys. The primary catalyst is clear: a successful and widespread rollout of the integrated sportsbook. Every new state that grants Fubo a gaming license is a significant milestone that validates the model and expands the total addressable market. Another potential catalyst would be the acquisition of exclusive rights to a major sports league, a move that would create a powerful moat around its service. Conversely, the risks are just as stark. The biggest threat is the relentless competition. Media and tech giants with fortress-like balance sheets could decide to more aggressively pursue sports content, driving rights fees to even more unsustainable levels. Furthermore, the regulatory landscape for online sports betting is complex and ever-changing, presenting a constant operational hurdle. A significant economic downturn could also impact discretionary spending, leading to subscriber churn. And of course, the ever-present risk of execution. The company must prove it can operate complex, highly regulated wagering business efficiently and profitably. It is one thing to have a vision, it is another entirely to execute it flawlessly. I want you to comment below with your thoughts on this pivotal strategy. Do you believe FuboTV's sports betting integration will be its saving grace or a costly distraction that derails the company? In summary, the narrative surrounding FuboTV is dangerously incomplete. The market's expectation is that of a small streaming player engaged in a losing battle for survival. The stock's volatile price action is a direct reflection of this perceived precarity. However, the deeper reality is that FuboTV is undertaking one of the boldest strategic pivots in the media landscape. It is attempting to build a new category of interactive entertainment, transcending the traditional models of both media consumption and online gaming. The company's fate does not hinge on whether it can steal a few percentages of market share from YouTube TV. It hinges on its ability to successfully fuse the stadium with the sportsbook, creating an experience that is more engaging, more immersive, and ultimately far more profitable than anything that currently exists. Investing in FuboTV is not a simple investment in online streaming. It is a high-risk, high-reward wager on the future of how we interact with live sports content. The current share price reflects the market's deep skepticism, but for those who believe in the vision, it represents a compelling, if perilous, opportunity. The tension between the expectation of failure and the reality of this disruptive potential will define this stock's journey for the foreseeable future.